Okay, joining us now is volatility whiz Scott Murray, and we kind of teased it a little bit about the fact that you're from Boston, Scott. And I think when we were chatting with Lena beforehand, Lena asked if it isn't Boston the team that we lose to as the Toronto Maple Leafs every year, and at which point Patrick said yes. So you're kind of our nemesis, but I said to myself, it's tough to get too mad at him because he is the home of Bobby Orr. So it's almost Canada, I kind of figure, with the greatest hockey player of all time being from your hometown.
Well, I can't say the Leafs are like our nemesis. We have the Canadians, right?
Right.
But, well, we're not good enough to be
they
your
just
nemesis.
exactly.
We're not good enough to be your nemesis.
They just crush the Toronto. It doesn't even matter. It's like when are the Canadians back in town?
Yeah, fair enough. So I do have a question for you, Scott. Because
before you change the topic, I do want.
It's a question about hockey.
It's
actually I'm keeping it on topic here,
okay.
Patrick.
All right,
I did see that we've talked a little bit about the worst fans in the U.S. And I take it, you kind of help me and understand this, that it's a little bit of a kind of a competition between you guys in Philadelphia for the worst fans of the U.S. Is this true? And are you going to defend yourself as a Bostonian that you're not the worst fan and it actually is Philadelphia?
I think we are the worst fans. I think it's not even close because when I go to Philadelphia, when I go there, it feels like people are nice to me.
Oh, okay. I heard that someone in the Philadelphia, they threw batteries at an opposing team or something, or the mascot or something.
No, that was Yankees. That was at Yankee Stadium, actually, the battery throwing. But I will be able to see this firsthand. I'll be at the Patriots-Eagles game in November, so okay. I'll let you know how poorly I get treated, in my Patriots garb.
Nice. Well, you know what?
Why are Bostonians hated so much as a fan, though?
Well, probably because we win everything.
Oh. The cockiness comes out. You know, I just cursed you this year.
I don't understand why you guys are hated at all, Scott. I don't get it.
All right, so Scott, I cursed the Bruins because I in my hockey pool I took Brad Marchand. So whenever I draft a guy on my team, it always goes wrong for that player. So the fact that he's on my hockey pool team is a little bit of a curse for you guys.
Yeah, that line, that line was just awful.
Awful.
Most of the playoffs. Yeah. So, I mean, hey, I don't know. I sort of like how the team. The only problem with the team right now is the goalie. Really, everyone just complains about Tuukka nonstop.
Really?
Well, I mean, you saw how soft he was, when it came down to crunch time. I mean, the last time we won, it was Tim Thomas. It wasn't him.
Yeah.
So.
You know that Rask was drafted originally by Toronto, and I think I think the trade was Rask for was it Raycroft? Oh, I'm trying to remember, but it was a goalie swap. And it was a complete disaster for the Leafs, and you guys landed Rask, and he's been a curse for the Leafs ever since. Did you know that?
Yeah. Well, no, I didn't know that.
He's a Leaf killer.
We're talking about what?
Basically, Scott doesn't know anything about the Leafs because he doesn't view us as a true threat. Okay, let's talk some markets here.
Yeah.
Let's figure out what
first round series.
Yeah, that's right.
Right?
So it's just for us, we're traumatized, but you actually have other people to be traumatized by. Okay, so let's talk some markets here. What the bond market? Do you think this volatility is going to increase, or do you think it's going to settle down?
Well, I was going to ask you. Do you think higher bond market volatility sort of presages equity market volatility?
That's a great question.
That's what I'm wondering right now.
Yeah, that's a great question. And today, for the first time, we had the bond market acting shaky, and I thought to myself, oh, it looks like it's actually affecting the stock market. So I don't disagree with you, but I don't think that it's going to be kind of the trigger that causes a stock market true sell-off. But I definitely wonder about the fact that I'm kind of surprised that people are so taken aback by this bond market, pullback. Like we screamed up on nothing. Like it's run like it stole something. And yes, the TLT's down 5 handles and the futures are down, like, whatever, they're down. But in the grand scheme of things, it's still been a bull market. And I'm kind of shocked that people are feeling as much pain as they are. And it just, I guess, shows how over their skis they really were.
Well, I mean, psychologically, whenever somebody has like a huge profit and you're not at your top tick, they start complaining, right? So,
Yeah.
so you give them 20% in treasuries, and you take like 10% away, and they're going to start whining. I mean, that's not, that's just human behavior.
Right.
But I mean, I haven't seen anything really happen in the corporate bond market yet, which is where obviously, you could have some serious problems develop. But, there was just an enormous amount of corporate bond issuance last week. Almost like, you saw auto sales for last month. Everyone just runs, right, to grab rates when they can. And then it's almost like pull forward demand. So when you see like issues in the corporate bond market, especially like, lower rated stuff, I mean, that's when you would probably be concerned. I mean, one thing that interests me is, and I'm sure you've talked to like at Barton Options or Zhang, like my buddy Zhang. I mean, he's looking at, the Treasury general account balance is going to have to rise significantly over the next quarter. And that's, there's a lot of supply coming to market. So for treasuries to be like asking for a little bit more yield here is not like really that big of a surprise, because they know that there's more behind it.
Yeah, it was a big surprise for the bond bulls, who were all falling all over themselves, telling you how rates were going to zero in late August. Like, I saw some pretty prominent people even predicting negative rates in the States, and I thought to myself, oh my God, that's just like, I thought it was like, here we go. What I'm shocked about the bonds. Sorry, go ahead.
You mean like Chemical?
There's lots of people doing it. We don't need to pick on anyone.
doesn't-
I have those in glass houses shouldn't throw stones, and I have lots of bad calls, so I'm not going to name any names. But the reality is that I was kind of shocked that there wasn't more caution by some of the bond bulls who had really gotten it, because to me, like David Zervos, who was bullish on bonds, he rightfully kind of bowed out in August, and he really nailed the call. And I thought that was a great call. And he might have been a week early, but in the grand scheme of things, this looks like now, when we're 5 handles lower on the TLT, he's looking like much smarter.
It's funny that you're giving him kudos, but you didn't give me kudos. So I pulled out on my TLTs. I was
true,
a bond bull. Yeah, but I'm not worth mentioning. You don't want to give your co-host kudos for settling. Well, actually, I did unload my TLTs like at 140, so I missed the last.
Yeah, I think you were a little early. Like you're a little early. So your wife, I'm not going to give you kudos for being early.
But Kevin's always like, hey, if there's QE coming, rates are going up. So like QE is coming, so rates must go up, right?
Well, I do believe that, and even though that is kind of counterintuitive to both bond bulls and also kind of new age MMT type economists, I still believe that I am in the Druckenmiller camp. That I believe that a QE causes the long end to back up. I do believe that. I am me and Druckenmiller. You're not going to convince me otherwise. On
your tremendous blog, I call it macro comedy, right?
Yeah. Because you can't take it seriously. But okay, that's fair enough.
Now that is a great name, macro comedy. I love that. That's awesome.
Yeah. I mean, at least it's backed up with the chart. QE starts here, rates go here. QE starts here, rates go here, and it's pretty simple.
So, Scott, I wanted to pick your mind on what's going on with these unicorns and IPOs, and what's your thinking here?
Well, watching yesterday's what was it, Smile Dental Corporation or something, SDC, dropped like 25%. Like what I'm having trouble understanding is, usually, there's a green shoe, right? So JP Morgan and Citigroup are running it, and obviously they weren't in the market buying, right? And like insiders are sort of stuck. There's a lockup, and you can't short it because you can't borrow. Like, how does an IPO like that drop 25%? It's almost as if, when they're making the book originally, the people that, these banks stuffed it down people's channels in the hopes that they might get the call for like the next Beyond Meat, and then just dumped it as soon as it opened. I mean, how does an IPO? I'm just curious. How does an IPO like that drop so precipitously at the open of trade? Because it's just not easy for something like that to happen.
Well, a couple of things. I can talk to you. This is Kevin. So first of all, some people might put in orders for too much, assuming that they're going to get cut way back. Like, so for example, when you're buying Beyond Meat, you might have put in for 10,000 and you get like 100 shares. So the next time, the next hot one comes along, you say, well, I'm going to put in for 100,000 and I'm going to get 1,000 shares instead. But the trouble is you put in for 100,000 and all of a sudden you get 30,000 instead of, the 1,000 you were expecting. And then the other thing is that you just get people that are just flipping it. They're just, and you'd be surprised how many fundamental investors are at the end of a bull market end up being nothing more than the IPO flippers. Like, and it just ends up like, I have friends that manage very serious long-term money, and they'll just tell me, they'll say, oh, you know what, I got my allocation of Beyond Meat, I sold it on the day of the open, and they're just viewing it as easy free money, so they take it. And the trouble is that eventually at the end of the cycle, as you mentioned, that there's too many of these people doing this expecting free money, and once there's free money, it attracts too many people, and eventually it hurts them. But even more interesting than that is the WeWork.
Yeah, that was, thank you. I was about to ask about WeWork. Okay, go for it.
Yeah, so go ahead, Scott. What do you think about that little gem?
Well, I mean, I've read, what people have. I've read some great articles about the people that actually do the work reading the S1 and stuff, and it doesn't look very good. They did clean it up, and I did hear that SoftBank really wanted to shelve it for a while because, I mean, they got a huge stake in it. But, I mean, the comps don't seem to work. You can't just put, a social gloss over it and pretend that it's actually going to make money. Uber and Lyft have already tried that with their social EBITDA, and that's not cutting it. So, who knows? I would have thought it was going to get pulled, but apparently it's going to get jammed down someone's throat next week.
Oh, they're continuing, right? Even though SoftBank's telling them not to do it. Oh, I didn't know that. They're going to do it.
Today they rewrote the filing. Yeah.
Oh, okay. To me, this might be the poster child of the abuses of the unicorn market and the private markets, and that's how I'm looking at this.
For sure, it is.
Yeah, like this is just the atrocities from an accounting perspective and abuse of shareholders that is done by this management, or allegedly done by this management. At the very least, it seems like they've stretched things to, let's just say, in a degree that we haven't seen in a long, long time. And the fact that the market is finally waking up and saying, "Hey, wait, this isn't. We're not going to buy this," is encouraging from a perspective of, at the very least, they're getting more kind of discerning. But what I worry about is the fact that how many of these private kind of unicorns that are trading in the private market are going to have to get re-rated now. And is the real bubble not in the public markets, but yet in the private markets? And this is what worries me. And how does this manifest itself? I don't know. Like, what if we just had a crash in unicorns and it didn't actually do anything to the stock market, which I could for sure see happening?
Right.
Well, I guess you would have to follow San Francisco real estate really closely, I guess, right?
Oh, well,
I mean, that's almost like an indicator.
Yeah, no, you're absolutely correct. But what's interesting is there's no real leverage in the system. So if we did have a crash in like private market unicorn values, it wouldn't necessarily translate into like the average stock having to go down. I'm sure there'll be some kind of knock-on effects, but it's not the kind of thing that like when we saw with the housing bubble, where there was all sorts of leverage in the system and the one kind of beget the other, and next thing we knew we had a selling wave. So nothing would make me kind of happier as a value investor than to see some of these stupid valuations go down and investors, instead of chasing these, WeWorks and other kind of, stupidities like that, they actually go out and buy, mom and pop kind of Main Street stocks. And that's what I keep hoping for.
Right. Well, there used to be a time, when an IPO would come out and it would be a good investment. And that seems like that's almost never now, right?
Yeah.
Yeah. I think that if you look statistically, IPOs on the whole underperform, and it was actually interesting that there's an IPO ETF, and they hold it for the next kind of year or two. I can't remember what the holding period was, but it was leading the charge.
A couple of them, yeah.
And it was leading the charge in this bull market. And I was thinking to myself, this isn't actually the way it's supposed to be over time. And what's kind of like, even though the S&P is sitting at all-time new highs almost today, or really close, this IPO ETF is still not anywhere near the highs that we saw kind of before the summer. So maybe this is a good sign. And
what's interesting?
Go ahead, Scott.
What's interesting about that is there's like two ETFs that specialize in holding IPOs, and the market caps on those are like tiny. Like nobody wants them.
Oh, that's interesting. Nobody. Everyone's too busy in the SPLV, which is the S&P Low Volatility Index.
Yeah, you might as well buy some toilet paper for 45 times earnings, right?
But it's safe, and it's got bond-like got bond-like proxy of like it's
yeah, exactly.
It's just that's another example of just the absurdity, and the chase for that this summer again was another one of those. Like it was kind of interesting this summer. You had like a chase in technology, and then you also had a chase in safety.
Yeah,
it was a wild summer.
What did you think of what you saw? What did you think of what you saw last week? I mean, it was like you look at names like Visa going down, and MasterCard, but you're like, well, these companies were out of control all year, so that makes sense to me. So people were just pulling. It looked like people were pulling off like the stuff that had performed the best all year now. Before the Fed screws it up for them. Screws up their year.
Oh, you think that's the worry? You think that they're worried that the Fed's not going to go and lower rates quickly enough?
Well, no, it's just it's kind of a binary event, and the trade thing is too that you have a binary event here. So if you're sitting on like a 50% gain in Visa, which is pretty much a fact, right?
Yeah.
Like you're going to pull that, right?
Right. So listen, actually,
you would at least consider it.
Yeah. Speaking of Trump tweets, and I see that you're a big fan of saying that things matter a lot more than Trump, and that you actually or think the market gets too excited about each tweet. Is that true? Like, did I read that correctly in your latest letter?
Oh, that I said that they're less important than okay. I think that Mnuchin knows, as a Goldman vet, exactly where we sit in the options expiration cycle, and he pulls out his gamma tweets, or he has Trump tweet to cause gamma when he wants.
You're kidding.
So
you actually think he's that sophisticated, that he's looking at the gamma and he's going, okay, there's short all sorts of gamma here. I want you to do it now.
So I have my tinfoil hat on with this one, right? And, and everyone's got their invisible hand conspiracy theory stuff, right?
Yeah.
So for me, it's as boring as Mnuchin going all right, I'm going to tell Trump to tweet out this trade news, right, on as soon as I see that gamma exposure is really high or whatever. So you get an outsized move, in the markets to prop it or get it to a higher level without that much buying power required, sort of thing.
Well, way back when, I think it was in the 90s, or maybe it's the 90s or 80s, I think that Greenspan did that. He cut rates 50 basis points at a surprise cut, and he did it on a Friday afternoon of expiry. And I think it was one of the largest one day rises that the stock market's ever seen. I think it was up like 12 or 15%. I can't remember the numbers, but it was definitely a surprise cut. And there was all sorts of Chicago guys and people that trade options that figured that he did it on purpose to get the most kind of bang for his buck.
Well, maybe that's true. So you think that my theory has merit?
Well, I think you're giving them a little too much credit. That's where I kind of fall down on like buying your argument. And although he was a Goldman guy, I'm not sure what did he do at Goldman? Was he a trader or was he an investment banker? I can't even remember.
Yeah.
Come on, all those guys, they know what's going on.
Okay.
Why do you think he took the job in the first place, right? Why do you think Mnuchin would take that job?
I don't know. You tell me. You think it was just like to trade his own, like to?
Well, if you do a certain amount of government service, okay, you get like a long-term tax exemption, or your long-term gains are exempt from tax, I think. So if you've got a massive portfolio of equity, then you're good.
Listen, I completely buy that argument, and that's why Cohen joined. And when everyone's saying he was going to quit, I said he's not going to quit because you have to work for a little bit of I can't remember whether it was a year or whatever the time period was. And I said he's never going to quit before then, because the reality is that he's going to be there until he gets his tax exemption. But I think Mnuchin is well through that period. I think he just likes being on TV or whatever. Or Mrs. Mnuchin likes visiting the Federal Reserve and seeing the dollar bills. I'm not really sure why he did it. Maybe you're right. Maybe he understands things that well, and I hope that they're that smart and shrewd.
Yeah.
I worry they're not, and it's just when Trump's on the toilet wondering what he's going to tweet, I just worry that's all that's going on there.
All right. Listen, I want to change the topic a bit here because before we wrap up with Scott, I wanted to get back into some options trading with you. And obviously, I'm certain that as a volatility guy that you are you're willing to be long and short options whenever you see the opportunity. But what would you say is your natural inclination? I mean, are you more generally a seller of premium? What is your sort of go-to just from your personality or in terms of the way you trade options?
Yeah, that's a great question, because things are changing a lot, like especially in the past year. So selling options used to be something that was a good idea when premiums were higher, but I think that all sort of ended around 2016, and selling premium on either side just seems like it's high risk. It's almost like premiums might be too low at this point. Something that I keep looking into and I keep talking about, but no one seems to sort of realize it exists, is something I call trend volatility. And that is say one directional volatility. So if you have, 25 delta call, that prices out 90 days and it's $1 and it goes to $8, then it's obvious that trend volatility is very high, right? So at the beginning of the year, I mean, you had, the move, through April, it was basically in one direction, right? So just buying calls, right, was a good idea. Whereas people that were trying to sell covered calls, I mean, they just kept, or just selling premium, they just kept getting burned, right? Yeah. So iron condors or okay. So the landscape has changed. Selling volatility is much more dangerous. I mean, as far as index premium is concerned, it's far more dangerous now than I've ever seen. So I basically never do that. I always want to define my risk by having, a corresponding position where if my trade goes like, into the toilet, and I'm just out the premium.
Are you more into like the calendaring of your hedges for something like that, or do you do just more pure on spread trades?
Well, I'm almost always doing a time spread. I
Okay.
don't, I try not to do vertical stuff so much. I just don't. But because that means that I'm sort of thinking about what direction the market's going in, and I don't really like to do that, right? I don't like to gamble on direction, so I'll leave that to all the morons on CNBC to do that. But
And me.
I'm just
And
me.
those with podcasts, and those with podcasts as well.
yeah. So I'm just trying, in general, I'm just trying to so the Fed meeting and like the trade talks and stuff, those are like great times for me, because I'm going to look at, I'm still waiting to find out when the China actual sit down is. Like, is there even a date yet?
Oh,
I don't think there is. I don't know. Like, it's whatever he tweets, whatever he's feeling like on, as I say, when he's in the washroom having on his break.
Yeah. So I'd like to know. Why is it a big secret?
Yeah.
But as soon as that happens, then I'll look at, I'll go specifically to the term structure of vol, and I'll see where the premium is, pair it up, kind of maybe try to figure out, if the market has a little bit too much like hope for a deal, and then set like a pair below it. But like, for the most part, like, I'm not thinking about direction and not selling naked, because to me, that's sort of how you don't stay in business for a long time.
Right. Yeah. Okay, well, Scott, on those wise words, we're going to wish you adieu and say thank you very much for coming by. One last time, where can people find you on Twitter?
At Volatility Wiz.
At Volatility Wiz it is.
Thank you so much for having me on. I really appreciate it.
Oh, it was a pleasure having
Scott,
you
it was
on.
great.
And even though you're our nemesis on Boston, we'll look forward to maybe someday being good enough to be your nemesis.
Awesome.
All right.
Take care.
Thanks Scott.
Again.
It was great having you on.